Yeah, the one thing we've noticed, because we have invested in this asset class, I said for over a decade, is that in good and bad times, it performs very well. It's very much a defensive asset class, and you're rightfully so. Through this global pandemic, grocery supermarket sales have surged as a result of the lockdown. But even in stable times, the grocery assets perform very well and provide a very resilient cash flow stream for our investors. And the grocery stores operate well in both good and bad times. That's why we like it.
Brady, isn't the problem that too many people have been in this game for too long and now the rules are changing fundamentally? And I think from Karen's intro, it was clear with these funds being locked up, there is just a big lack of liquidity in property right now, and that's likely to remain so for a while here, isn't it?
Yeah, I think that there's winners and losers, unfortunately, out of this crisis. Slate's been quite fortunate because of our focus on the last mile logistics sector. We've been able to raise fresh capital from our existing investors and new investors on the strategy. I think people understand the resiliency and defensive-ness of grocery specifically. We've just closed on a fund the end of March, which was really the beginning of the crisis, where we raised and were oversubscribed 250 million euros of equity to invest in our grocery strategy, specifically in Germany. So I hear you that there's others that are going to unfortunately suffer when we come out of this.
Can I get your views on two specific issues? One is increasingly now in Europe, we're seeing governments getting involved in rent controls, particularly in Berlin, where they just passed this law freezing rents for about 5 years, which hasn't gone down that well with investors, but you can understand why they're doing it. And the other one is the risks related to insolvencies once we come through the other side of all these measures that governments and central banks are putting in place to try and prop up economies at the moment. We are going to have some kind of hangover. I wonder if we begin to see real insolvencies take place then, and that impacts the retail portfolio.
Yeah, very good questions. The first part, the rent controls you're referring to in Berlin relates to, multifamily apartment residential. If investors, Slate doesn't invest in that asset class in Europe or in Germany, but unfortunately there was a lot of capital that was investing in that at very kind of tight yields. And typically when you do that, you're underwriting rental rate growth or income growth. It's very hard to do when you have rent controls. So I do suspect there'll be some pressure in that asset class. And then you're absolutely right. Coming out of COVID, there will be liquidity issues for some. As I said, there'll be winners and losers. Slate actually in Canada just raised, and it's going to start a special situation funds to try to meet that liquidity gap. There are a lot of good real estate operators and more importantly, some great real estate that will fall out of this situation where banks and lenders might be a little bit more reticent to lend, cut down on LTVs or loan to values, and borrowers or operators of real estate will need some liquidity. I think there's an opportunity to provide that, and that's what we're doing in Canada. And I would suspect that there's others that will do it here in Europe as well as the United States.